Hi, thank you for watching us here at Tax Talk UK, where we talk about all things tax and other aspects of working for yourself. And today we're going to talk about what happens if you are employed and you change jobs. How do you know that your tax is correct across the whole tax year? And before I talk about that, if I could please ask you to take a moment to subscribe to our YouTube channel. That way you'll easily be able to refer back to this information should you need to, as well as finding other information that we have available on a whole wide range of topics. So on to then employees who are changing jobs. So as you will understand from our other guidance, if you are employed by somebody and you have your tax deducted on a regular basis at the time, your pay frequency, effectively, whether that be monthly or weekly, then your employer will deduct the tax and national insurance and pensions before paying you what's left of your pay. So that's quite straightforward. But what happens when you change an employer? How will your new employer know how much tax you've paid, and particularly if you've not used all of your personal allowance, perhaps you haven't worked for a few months, or at the other end of the tax year, perhaps you leave employment and don't take up something new before the end of the tax year. So how does this work? So as you will know, at the end of the tax year, your employer gives you a P60, which summarizes your income and the tax deducted throughout the tax year. So if you leave your employer throughout the course of the tax year, you will receive, instead of a P60, you will receive a P45. And what that will detail is how much you have earned in the tax year so far, how much tax has been deducted from that, and as well as what tax code has been used, and whether you have to have student loan deductions made. So the point of this is that your new employer will then be able to pick up exactly where you are in terms of your income and your taxable income and your tax deducted for the year to date, and they will be able to follow on with that, which, as long as that they receive the P45 and process that, then they will be able to ensure, and they will be able to ensure that they follow on from what your previous employer has done. So for example, if you leave jobs mid-month and you're paid monthly, there's a danger that both of your employers could use your personal allowance available for that month, or on the opposite, neither of them use it. So the P45 is to ensure that it's exactly correct, and that means that through the course of the whole tax year, your tax deducted will be correct, because of course you don't want to get to the end of the tax year assuming that all of your tax has been deducted correctly, and then a little while later hear from HMRC that you have underpaid tax and now need to make that payment, which would be your liability, not your employers. So if you're not sure, you should raise this with your new employer if you're not certain, or if you're not sure that the tax has been applied correctly, or check with HMRC, because these days employers use a system called real time, which means that the payroll information goes straight through to HMRC on or before the date that you receive it. So HMRC always know how much you have been paid. And then I mentioned earlier that if it's your first job in the tax year, so say for example, if you only started a job in say June and you didn't work for April and May at all, then you would have more of your personal allowance available, and your by making sure that your new employer knew that you haven't worked at all, they will then be able to process the payroll again in a way that ensures for the whole of the tax year that you have paid the correct tax and used all of your personal allowance. Now, say for example, if you start with an employer through the tax year and you have previously been maybe self-employed and needing to report that income on a self-assessment tax return, then again you should notify your new employer that you have had employment through the tax year, but this is now your only employment, unless of course you're carrying on with your self-employment, and then you should notify them this is a second job. And of course, you can always look on your personal tax account on gov.uk at any time to see how much you've earned and how much tax that you've had deducted. And then at the end of the tax year, you will receive your P60 from your new employer, and that if they had the P45 in a timely manner and were able to process that, then the P60 at the end of the tax year will include the income from both sources. If it doesn't, then it is worth just double checking with HMRC or via your personal tax account on gov.uk, just to make sure that your tax was correctly deducted for the year, because of course there can be some confusion, or sometimes the P45 isn't received in a time that means that it can be processed. In this scenario, sometimes HMRC will be triggered then to notify your new employer of the pay to date, but you know, these systems still are quite outdated now, and although we've moved a long way forward with real time, some of the systems still are very clunky, and there is still it's still very easy for an issue to arise. And as I mentioned earlier, if ultimately if there is any underpayment of tax, it is you that will be liable to pay that. So it's important to make sure that is all correct. So I hope that makes sense and explains how the process should work in terms of changing employment throughout the tax year, and how to check that all is as it should be. Thank you very much for watching, and please do remember to subscribe to our YouTube channel. Goodbye.